Hi, this is Michael Rony Mullick, and you're watching the Post Market Show. And so, what a day it was! Market yesterday it moved up significantly, and now it is down significantly. So it's a complete U-turn in the markets. In Nifty, Bank Nifty, yesterday all the sectors were in the green, strongly in the green. We were seeing absolute, continuous rally in the market, and as expected, it was a short covering rally in the market. It was a short-term bounce, or it was a dead cat bounce, whatever you call it in the market. And today we saw a complete opposite sentiment in the market. Everything ended in the in the red. Actually, all the gains were wiped out of Nifty and Bank Nifty both, and markets ended at the lowest point of the day, bringing all sectors along with it deep in the red. So that is the markets these days. One day you see a huge up move and people take bullish positions, and the next day everything is opposite. The market gaps down, and it falls continuously in a downward channel, and exactly that is what happened in the market. So let us look at the Nifty's chart for the day, and let us see how things have been. So Nifty, let us open up the 5-minute chart to get a clear picture of the intraday moves. So as you have seen, markets had ended well in the green yesterday. Then today the Asian markets were down. We had seen the Japanese market down, the Hong Kong market down, the Korean markets down, and along with it the US futures were also trading in the red. And as SGX Nifty was indicating, we did open with a gap down, and from there was a continuous sell-off in the markets, and markets found a bottom around 1010 5 to 1010 around 15,434, and it recovered slightly, but again that was also sold into, and the markets hit a bottom of 15,385, and again it tried to move up but ended at the lowest points of the day. So as expected, the lines which we have drawn, and we have been talking about this for the last couple of days, that 15,400 is now an intermediate level of support for the markets, and since it was broken out, the markets broke out from that level, so now it is acting as a support on the downside. So today the market took support exactly at that level 2 times, and so markets ended just above that level of support. So let us see where the markets head tomorrow. So tomorrow is an expiry day. Expect a lot of volatility in the markets. So we will be coming back to that, what to expect for tomorrow. But now the markets are deep in the red. Nifty ended 1.4% in the red. Bank Nifty, similar story, but Bank Nifty is slightly not that much negative. It is down just slightly above 1% is what we see. It is down by 1.01%. That is 346 points, or 32,845 is the level where it has ended. So you can see that the markets did open with a gap down as expected. Then it took support multiple times at yesterday's low. Yesterday's low was a very important level which I told you to mark in your charts, and exactly the market took support at multiple times at the same level of 32,790 to 800 level is where the markets have taken multiple times support. And Bank Nifty at the end of the day also ended deep in the red. So the other sectors, the Nifty mid cap, small cap, again after yesterday's fantastic up move, it is down significantly today. It is down almost 1.6%. Nifty mid caps, and Nifty small caps not that much bad, but still down by 1.05%. Talking about sectors, all the sectors ended in the red, so nothing much to talk about there. So let us see which sector has ended most in the red, and that is the Nifty metals. So Nifty metals are absolutely going nowhere. So the day before yesterday it was up, it was down almost 4%. Yesterday it was up 4%. Today it is down almost 5%. So Nifty metals seems to be in a very, very tight bear grip, and possibly the bear cycle in the Nifty metals have already started. So that is something to look into. So Nifty metals is the top dragger today. It is down almost 5%. Next we have Nifty media down by 3.5%, and also Nifty energy is down 2.3%, because we have seen that the crude oil prices were falling in the global market, so that is why the Nifty energy is down. And talking about other things, the Nifty IT was slightly under selling pressure, but TCS outperformed the other IT stocks, so that is something to watch out for. TCS looks strong. Nifty reality is down. Nifty Private Bank and Nifty PSU Bank. Nifty PSU Bank did not fall that much, but Nifty Private Bank is the one who led the fall today. Nifty Private Bank and Nifty Finances is down by slightly more than 1%. Talking about Nifty movers of the day, we see Reliance being the top dragger of the day because Reliance is down 3.04%. It contributed almost 62 points to Nifty's downward downward rally. Downward journey is why is this? Because the crude oil prices are going down, and that is why the companies like Reliance will be the one to get affected the most. Their profit margins will be affected because they are the oil manufacturing companies, so oil manufacturing and oil exploration companies. So these companies, if the crude oil prices are higher, they benefit from that. But on the other hand, oil marketing companies like BPCL and IOC, Indian Oil Corporation, they stand to gain the most from the drop in crude oil prices. And not only them, but we also have other sectors like the automobile sectors, the cement sectors, the paint sector. All of these can get benefited from the fall in price, and that is why we are seeing along with BPCL, Hero MotoCorp, Maruti, Power Grid. So these are on the positive side in Nifty. And TCS, very interestingly, has ended in the green today, despite ICI, the Infosys falling almost 1%. TCS looks strong at in the IT index. So TCS is up by 0.34% today. Talking about FII, DII selling activities, FII has as usual sold for 2,900 crores, and DIIs did not buy that much today. They have only bought for 1,850 crores. So that's around 1,000 crores of net institutional figure in the negative. That is why the markets did not recover much today. Economic calendar, obviously today we talked about the inflation data which would be coming out for UK for the month of May, and it is out already. It came at 9.1%. What was the expectation? Expectation was 9.1 to 9.2%, and it came as expected at 9.1%. So the markets did not react much, but obviously 9% inflation is definitely on the higher side, and that is not good for the markets. So having inflation above so high for a developed economy like UK, that did not go well with the markets. So that is why we are seeing the European markets are down today significantly. Not significantly, but slightly 1% and slightly below 1% is what the European markets are down. So let us look at the European markets and get to see the charts, how things have ended over there. So let me open up the chart for German index. So German index DAX, it is, let me pull up the 5-minute chart, it will be more clear. Yes, German index is down. You can see it was a one-way downward journey for the wait 1 second. Yeah, German index, it was not one-way down. It is it opened with a huge gap down, and then it tried to recover but ended 1.11% in the red. The French index is down by 0.8%. You can see all the markets trying to recover towards the end, especially after US market opened. All the markets had a recovery. So French index ended 0.8% in the red, and UK futures is trading at 0.49% in the red. So the European markets are on the slightly weaker side because of high inflation rate in the UK, which was announced just today. Now coming to US markets seem to have opened with a gap down because the European markets were down, but then we see a huge recovery in the markets, and then there was some slight sell-off, but market is again testing the highs of the day today. So that is good to see. S&P 500 up by 0.6%, Nasdaq up by almost 0.78%, and Dow Jones is also up by 0.48%. So US market, all of them opened with a gap down because the European markets were bearish, but then there was a huge amount of recovery in the markets, and now we are seeing the markets are trading somewhere close to the day's high. So that is good to see the US markets recovering. Let us look at the US VIX. It is down 3.4%. Now it is below 29, below 30. It's at 29.07. India VIX has 21.3. So no major change over there. 0.73% up is what we see in India VIX. Coming to SGX Nifty, since the European markets were down, so we were seeing the SGX Nifty not very strong, but when the US market started recovering and opening, we can see a huge rally in the SGX Nifty. At one point of time, it was at 15,540. That is almost 140 points up from where the markets closed. And then there was a sell-off, but again now it is trading close to 15,500 in SGX Nifty, so that is uh, around close to 100 points gap up if the markets are able to end at this level in the US. So that is the current situation in the markets. So hopefully let us talk about the OI data, obviously, because tomorrow's expiry is important. Tomorrow 23rd June is the fourth expiry of June, and the June series has 5 expiries. So the last day of June is also having an expiry. So tomorrow is the fourth expiry. We see a complete U-turn in the OI picture of the markets. The put call ratio for Nifty is back at 0.64. Huge amounts of call have been written today because the markets opened with a gap down. It continued to move down. So people who are selling their eyes and selling put options yesterday, expecting the markets to go higher and higher, all of them had to cover their puts, and then to manage their position, they must have sold additional call options. So right now 15,500 has the highest amount of intraday call build up, followed by 15,700. So right now everything looks again bearish in the OI data. Talking about highest OI, 15,700 seems to have the highest amount of open interest on the upside, and 15,000 the round level of support seems to have the highest amount of put OI on the downside. So people are very conservative when it comes to a downside, because in these markets what news is going to come and how the markets will react. So 15,000 to 15,700 is what the people are expecting for tomorrow. I know it's a very, very wide range, but people are trying to keep their bets conservative, since it's the markets will end until open tomorrow. So how the US markets react, will it go in the positive, will it trade in the negative, all these fears about that. So people did take a conservative outlook for tomorrow. Bank Nifty, again Bank Nifty, same story. For Bank Nifty, it is the put call ratio is down to 0.85%. Yesterday huge amounts of put were written in the market, but today, since the market was lower, it is not as bad as Nifty. So that is why the put call ratio is not like 0.6 or so. So a good amount of put was written in Bank Nifty as well, but the highest amount of call was written at 33,000 levels. So that is something to look out for, because the markets ended close to that level, and people are expecting 33,000 to be a strong resistance in the market for tomorrow. And good amount of put OI has also been taken out from the market. So put unwinding is what we have seen in the markets, and that is why the markets must have fallen even further. Talking about the highest OI in Bank Nifty, 33,500 seems to have the highest OI for tomorrow's expiry. That is going to act as a resistance if the markets go on the top side, or it goes up. 33,500 is where the maximum amount of call is being written, and on the downside we see 32,500 having the highest amount of puts, followed by 32,000. So people are expecting 32,500 to 33,500, this 1,000 point range for Bank Nifty tomorrow. So let us see what happens in the markets. Talking about Nifty's levels for the day, price action based levels, obviously 15,400 I told you is going to act as a support. If the market manages to open below this level, then you can obviously expect the markets to take slight support around 15,270 levels. If that is broken, very, very important, 15,183. The markets touched this low multiple times on 17th June and 20th June. 2 times it has touched this level and it reversed from there. So these 2 levels are very crucial to watch out for, and if that is broken, 15,000 will be acting as the last level of support for the markets. And on the upside, if market manages to open with a gap up, obviously today's high is going to be tested, that is 15,560 levels is going to be an important resistance, and if that is broken, the most important resistance 15,670 to 15,700, that is going to be tested. And if that is broken by any chance, then 15,850 to 900 will act as a next level of resistance in Nifty. So right now let us look at how the markets in the US end. So a lot depends on that actually. So let's see how it ends. And the Fed chairman Jerome Powell is also testifying in front of US Congress. So let's see what he speaks. Obviously whatever he has to say has already been discounted into. Market is not expecting any new revelations over there, so that is something to, if there is something, we will obviously be discussing it in tomorrow morning's show. So right now, as of now, US markets are in the green. Let us see where it closes. If it manages to close in the green, then we can see a gap up in the markets, and maybe we could have a bullish expiry, because the last few expiries we are seeing that the markets are trending either on the upside or on the downside. So it'll be very interesting to watch what happens in the US, and how the Asian markets open tomorrow, because we are seeing the Asian markets are slightly bearish for some reason, and so we will be watching out for that as well for tomorrow. And before I forget, one thing to see over here is we know that with UK inflation out this week, we have the next important, that is the Japanese inflation data coming on Friday morning, is something to watch out for. But very interestingly, the Japanese currency against US dollars, that is USD JPY, if I open the daily chart, it is at the weakest point. You can see it is USD JPY is around 136.27, so it's around 136 yen per dollar. So that is something, it is last 30 year weakest point, last 30 years low for the Japanese currency against USD. So just like USD INR is also up today, USD INR is close to 78.18, and it touched a height of 78.40. So Indian rupee is the weakest in its history, and same with Japanese currency as well. So the USD JPY is also up. You can see it's up significantly, so that is something to watch out for. So let's see what the Japanese inflation have in store for us on Friday's trade. So I thought that's something interesting, so I shared the information with you. So keep an eye out for the JPY USD pair, and let's see how the markets react to that. Overall, markets seem to be consolidating with a good amount of volatility. So either 15,700 has to be broken on the upside so that the market can continue its upward journey, or 15,000 on the lower side should be broken if the market wants to go on a further bear run. So that is how the markets are positioned right now. Only good thing is the crude oil prices are coming down, so that is something good in the markets. So crude oil prices is around $106, and at one point of time it touched a low of $101. So if it comes down, obviously that is going to have a good that will create a less pressure on the inflation, and hopefully the markets can take it as a positive sign and move upwards. So let's see where the markets open tomorrow, and we will discuss all of those in tomorrow morning's pre-market show at 8:30 a.m. in the morning. So until that time, have a good night, and thank you for watching.